What's going on, everyone? Welcome back to another video and happy new year to all of you. This video will cover the 4-hour candle profiling. It is a mechanical way to read the price action using the swing points. Here's a quick disclaimer. This framework is not based on a CRT or any other conventional methodology. It is inspired by the MMXM Trader Next Day model and the T-Trades teaching. Now, what would be my thought process if we can profile a single weekly candle like Monday, Tuesday reversal, like midweek reversal, consolidation reversal, Thursday counter profile? Same logic will be applied to the 4-hour candles. When one 4-hour candle is reversing, it is actually creating the second candle of the swing point, and the following candle is expected to expand. Now, inside a daily range, there are 6 4-hour candles, and the key focus would be on the following candles. For the indices, you have to focus on the 2 a.m. to 6 a.m., which is covering the London session, the 6 a.m. to 10 a.m., and the 10 a.m. to 2 p.m. And better to close the trades before the 12 p.m., which is the New York lunch. So these two are covering the New York session, and the 2 a.m. to 6 a.m. is covering the London session. And for Forex, you have to focus on the 1 a.m. to 5 a.m., which is the London session, the 5 a.m. to 9 a.m., which is a New York session, the 9 a.m. to 1 p.m., which is also covering the New York session when there is a news on the 10 a.m. Now the 4-hour candle profiling patterns. The first one is the Asia reversal. If Asia candle reverse, expect London to expand and New York to continue. Now for indices, the reversal is likely to occur within the 18 candle or the 22 candle. Like the first 4-hour candle of the day is the 18 to 22. The reversal will likely occur within that candle or 22 to 2 a.m., which is the second candle of the daily range. Now for Forex, the reversal will likely to occur within the 17 or 21 candle. The first 4-hour candle of the day is 17 to 21, and the second 4-hour candle of the day is 21 to 1 a.m. Now the London reversal pattern. This is same like the classic buy day or the classic sell day. Expect the London to reverse and New York to continue expanding. For indices, you have to focus on the 2 a.m. to 6 a.m. 4-hour candle. The reversal will likely occur within that window. For Forex, you have to focus on the 1 a.m. to 5 a.m., which is also a London session 4-hour candle. The reversal will likely to occur on that candle. Now these are the schematics. We are having the 18 candle opposing run, the 22 candle reversal, which is Asia session, and then the third, fourth, fifth candle expansion, which is the 2 a.m., the 6 a.m., and the 10 a.m. candle. The daily candle will look like this: open, low, high, and close. Now for the London reversal, we are having 18 and 22 candle consolidation, 2 a.m. candle reversal, which is creating the second candle of the swing point, then the 6 a.m. candle and the 10 a.m. candle, which are the New York session candles, are expanding to the upside. Now the 4-hour candle profiling patterns for the New York session. When the London and Asia fail to reverse or manipulate, the New York candles are expected to handle the reversals and continuation. For indices, you have to focus on the 6 a.m. to 10 a.m. candle, which is acting a reversal into expansion candle. The reversal is likely to occur on this candle because it is covering the major news events of the New York session. And if the 6 a.m. candle is failing to reverse, then the 10 a.m. candle will reverse into expansion candle. For the Forex New York reversal, you have to focus on the 5 a.m. to 9 a.m. candle. Or if the 5 a.m. to 9 a.m. candle is failing to reverse, then the reversal will likely to occur on the 9 a.m. 4-hour candle. So these are the schematics. We have a 6 a.m. reversal, 18, 22, 2 a.m. consolidation, 6 a.m. taking this candle low because it covers the news events, and then the 10 a.m. candle expansion to the upside. The daily candle will look like same: open, low, high, close. Now for the 10 a.m. reversal, we are having 18, 22, 2 a.m. and 6 a.m. opposing run, 10 a.m. taking the 6 a.m. low, and then expanding to the upside. So this will be a reversal into expansion candle because it is manipulating the previous candle low and also expanding to the upside. Now comes the entry ideas. The entry follows the classic change in state of delivery and the order block methods. Like when you are catching the reversal candle, then you have to use the change in state of delivery as an entry. If you are trading the expansion candle or the third candle, then you have to use the continuation order blocks, down close candles or up close candles. and then followed by a closure, and the next candle is an entry. Now comes the framework alignment. You have to align the pre-existing daily buys, the next day model, the phase of price delivery, and the open low high close and the open high low close of the candle. And you have to align the swing points. Like in a next day model, we know that the third candle is going to expand, so we will drop down to the 4-hour chart and we will align the swing points with that. Now these are the schematics. We have a consolidation throughout the day, 6 a.m. manipulation within the news window, followed by a closure above the down close candle. And also here the next day model pattern is forming, so we would expect the next candle, which is at 10 a.m. to expand to the upside, open low high close candle. So going into the 10 a.m. open, we had down close candle, a stop run, and also tapping into the change in straight up delivery, followed by a closure above. Now we know that the 10 a.m. low is established because we have the order block pattern. Now I could enter on this candle, putting my stop loss below this low, aiming for 2 hour our whole daily range. Now I will go over each of the example we covered previously. So here with the first example, I will go over the Asia reversal in terms of the 18 to 22 4-hour candle reversal are 22 to 2 a.m. So here we have a reversal signature established, Tuesday high, Wednesday and Thursday continuation to the downside. The Wednesday candle is having a large wick, but if you notice, we have a failure swing because this candle is not reaching a weighted level or a weighted low. So I want to see a potential downside idea. With that in mind, I would drop down to the 4-hour chart. Now on the 4-hour chart, I would want to see open high, low close daily candle. And for that, I would want to see a 4-hour swing point and then expansion to the downside with this objective keeping in mind. Now with that, I have a 18 candle reversal, which is the start of the day inside this fair value gap. And if we use the phase as a price delivery, we have expansion, retracement, another expansion, potential retracement into another expansion. Now from now on, I would skip it to the London session and we would trade that an open high low close candle to the downside. So going to the 15-minute chart. So here on the left side, you can see that candle, the second candle reversal, third candle expansion, and we want to see the London session also expanding to the downside. Skipping the price action to the London session. Now with the 2 a.m. candle open, we are opening up, but we haven't created the wick of this candle. And if you notice, we are having a consolidation. So I would wait for some sort of manipulation or SMT divergence to then continue to the downside. Now I need a change in the state of delivery, the confirmation, and then expansion to the downside. Now with this candle, we have the change in the state of delivery established. On the 5-minute time frame, we have a change in state of delivery established before that with this candle, but I will use the 15 time frame. Now with that, I could enter on the next candle, my stop above the 50% of the change in state of delivery or the 2 a.m. candle wick. I would target just about 2 hour. Now with that, our 2 hour objective is reached. And if you have noticed, we are having an open high low close candle, another potential trade opportunity with the 6 a.m. candle, because with the 18 reversal, we would expect the 22, the 2 a.m. and the 6 a.m. candle to expand to the downside. This was my another trade opportunity. 6 a.m. candle open, then creating its high, which is a protected swing, and then expanding to the downside with a 2 hour target. So this was my another trade opportunity. In the second example, we will cover the London reversal. So starting with the daily chart, we have a candle 2 closure, a potential reversal signature and a swing point. So we would expect the Monday's candle to expand to the downside. So with that keeping in mind, I will drop down to the 4-hour chart. Now on the 4-hour chart, I would want to see an open high low close daily candle. And for that, I need a 4-hour swing point to be established and then continuation to the downside. Now with the 2 a.m. candle, we have tapped into this fair value gap. And also if we use the phase as a price delivery, we are having a retracement, expansion into another retracement and another potential expansion. And remember that the new feather price delivery is always starting with a swing point. So we are creating the second candle of the swing point. We would expect the 6 a.m. candle to be an open high low close candle. Now first, let's confirm the reversal inside the 2 a.m. candle. So I will drop down to the 15-minute chart. Here on the 15-minute chart, we are having that 2 a.m. reversal, which is also a London reversal in terms of the daily profiles. Up close candles, closure below it, confirming the change in the state of delivery, and also the wick up this 4-hour candle. Now with the 6 a.m. candle, I would want to see an open high low close candle. Now with the 6 a.m. open, we are having a continuation order block. And if we pull up the NQ chart, which is pretty weak and creating a strong candle. Now with that on the 6 a.m. open, I would enter with that and put my stop loss above this high because the manipulation is already occurred and order block high is a protected high. So I would trade that to the downside with 2R. And with the 6 a.m. open, we expanded to the downside, reaching that profit target. And we kept expanding to the downside. This was a trade idea. In this case, I didn't wait for the high of the 6 a.m. candle because we have already created that order block, and order block high is always a protected high, so we don't need another manipulation. If it was a consolidation, then I would have waited for the range high to be manipulated and then the 6 a.m. expansion to the downside. But the order block high and the protected swing was already created, so I entered on the 6 a.m. open and stop loss above this and then expansion to the downside. Now in the third example, I will cover the New York reversal with the 6 a.m. 4-hour candle. So we had a reversal there, and then we would want to see a continuation to the downside. For that, I would want to see an open high low close candle and a 4-hour swing point to continue to the downside. Now the 18 and the 22 candle drift away from the opening price, and we need the high of the day to be established. Now with the 6 a.m. candle, we have created the high of the day inside this fair value gap, and also if we use the feather price delivery, we have expansion into retracement into another expansion, and we are closing below the up close candle, which is also creating an order block. So from this point onward, I would drop down to the 15-minute chart. So here on the 15-minute chart, we have the high of the day already established. I have skipped the price section too much, but with the 10 a.m. open, we had an open, a high, potentially creating that order block. Inside another order block, which is a propulsion block. Then a closure below the up close candles, which is telling us that this high will be a protected high. I could enter right here, my stop above here, and targeting just about 2R. And we have expanded to the downside. And if you have noticed, we are having a volatility driver or a news event inside the 6 a.m. to 10 a.m. candle, which was the 930. 930 manipulated the daily high, and then the 10 a.m. was an open high low close candle, open high creating that wick, then a close below the up close candles, and then expansion to the downside. Now in this example, starting with the daily chart, we are in a consolidation, so I don't want to see a range high or a range low to be manipulated, and then we will trade it to the either side. So dropping down to the 4-hour chart and waiting for the range high or the range low to be manipulated. So on this day with the news event, we have manipulated the range high with a 6 a.m. candle. Now if 6 a.m. is manipulated the range high, so this means this high is a protected high, and the 10 a.m. candle will expand to the downside. So with that keeping in mind, I would drop down to the M15 chart. Now on the M15, we have a larger series and it is too much in the discount, so I would drop down to the 5-minute. Now on the 5-minute, we are having a change in state of delivery already established, but we would wait for the 10 a.m. open high low close. Now with the 10 a.m. open, we are closing below the series of up close candle, which is creating that high probability order block, and also the wick up the 10 a.m. candle. Now with that, I would enter on the next candle, my stop above this high, which is an order block high, and I would target just about 2R. And with that, we have reached our profit target of 2 hour. And notice that the volatility driver, which is 8:30 and 9:30, are also inside the 6 a.m. to 10 a.m. 4 hour candle. So if it's reversing, then we would expect the 10 a.m. candle to be an open high, low close candle. Now in the last example, we will trade the 10 a.m. candle as a reversal into expansion candle. But for that, you have to understand the reversal into expansion candle first. The reversal into expansion candle means that the candle will reverse the price action, but also it will be having a small wick and a large expansion. Usually the reversal candle will look like this, which will be having a large wick and a small body. But in this case, the reversal into expansion candle is like we have manipulated the previous candle's low and then with a small wick and then expansion to the upside. And shout out to the Garrett for teaching us this candle. So for this example, we are on the daily chart. We don't really have a point of interest, so I will mark out the previous day low as my point of interest for expansion to the upside. And we are having equal highs on the top of that. So with that, I would drop down to the 4 hour chart and I would wait for a swing point to establish, and then we will trade it on the 15 chart. So marking out the previous day low and these equal highs. Now with the 10 a.m. candle open, we have manipulated the previous day low. Now we could expect an upside price action or to these equal highs. So I will drop down to the 15 chart. Here on the 15-minute chart, as you can see, we are establishing that reversal into expansion candle. We have a change in the state of delivery established, Asian consolidation, then a London protraction, and then taking the previous day low, and we are having equal highs. So I would target that, and we have established a change in state of delivery. With that, I would enter on the next candle. My stop below the 50% of this order block. In this case, it's too large. So I would put my stop loss about 50 points, and I would target just about 2 hour or the range high. And with that, we have expanded to the upside. And this was the example of the reversal into expansion candle. We are having a small wick and then expansion to the upside. Hope you guys have learned something from this video. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.